Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the indices have been doing and are likely to do. Let's begin with Nifty. On the monthly chart, no major change. It's still consolidating in this area between 21,800 to 22,800. These are more or less base candles. So if uh, and also we are very overextended. So good chance that if we fall, we'll have a deeper correction. But probably that might only happen in the next few months. May not happen in this month. But since volatility is going up, we need to be cautious about aggressive positions in the market, especially the index. So, and using FNO strategies. That's still the main area of demand zone on the monthly chart, which is quite far. And there is no area of supply right now. But for the last 5 months, we have been just consolidating in a narrow range, inching up. Usually, such price action, when it happens, it's followed by a bigger drop, which probably maybe in June, July would end up till 20,000. But that's still an analysis, and we'll go to smaller time frames to see what is happening. On the weekly chart, that's the range which we have been playing on. That's the weekly demand zone. And technically, we do not have any supply zone, but that's the picture of supply that has been created. So prices might again make an attempt to go towards 22,700, 5,800, maybe even inch up and go and create a new all-time high, and then again start consolidating. So uh, this is completely range-bound price action, and with VIX going beyond 20, you need to be careful. Avoid shorts without any confirmation. And now longs will be very aggressive. So technically, index does not have great reward to risk ratio trades. Maybe you will get better trades in the individual stocks. The next area of demand zone is all the way here, and probably this one. So multiple levels there on the weekly area. So that's probably going to be your range. On the daily chart, the range bound price action is clearly viewed here. If you see this, that's how it has been moving. So from 21,800, it will again make an attempt to move towards 22,800. There is nothing to stop the price. So avoid shorting at these areas. Shorts only on confirmation. Probably once it goes below 22,350, you can look at waiting for a pullback and then going short. But based on this, price may move up till this 22,600 can act as an hurdle. Uh, that's the daily area of supply zone with a decoy, a small decoy there, and that's the area of demand zone, which is right now holding up. So that's going to be a range for the next a couple of weeks, at least till the election results are out. So right now, a little bit bullish bias, but if you're long at these areas, then you can continue holding. New longs maybe based on the smaller time frames. Let's just take a look at the 75-minute chart. So right now, if you see there is no demand zone until this, that's a demand zone which it held. There was a slight decoy there, and prices went up nicely from there. More of a short covering rally. So once we go beyond 22,600, we could see prices hitting about 22,800. There is nothing really to go long. It's all high on the curve, at the edge of the high on the curve, maybe on a 15-minute. This is going to be your, so let me just include both. That is going to be your area of demand zone, which can be traded, and that's your area of supply zone. So that's going to be the range for intraday for the next few days on Nifty. So technically, Nifty does not have high RR trades if unless you were long at these areas. If we come back again here, you can look at confirmation longs. And once we enter into these areas, look for confirmation before you go short, and preferably avoid trading index till the election results are out, because you could see wild swings based on how the results are. India VIX, again, very high, 20. can probably move till 26 to 30. If that goes up, you will see more volatility and wider swings in the index. Uh, Nothing has changed on the India VIX as such. It's probably going to inch up further higher. Now let's take a look at Bank Nifty. So that's a pretty compressive price action move in Bank Nifty on the monthly chart. No supply. Prices are moving from these areas, which is a pretty narrow range. The next best area of demand zone on the monthly would be somewhere close to, let's say, 42,000. That's where you can look at getting into swing long positions, no supply zone. On the weekly chart, after that strong fall in the week, we again are moving up from these areas of demand zone. So that's the area from where it is moving. And this demand zone is formed from here. So multiple support and demand areas for Bank Nifty, no supply can again make an attempt to move towards, let's say, 48,500 to 49,000. Shorts only on confirmation. On the daily, that's a fresh level of supply zone. So if we come here, look for confirmation shorts on Bank Nifty, and that's the area of demand zone from where we have been moving up. So this is the range on based on the daily for the next week. Wider range. If we pull back somewhere close to 47,500 to 47,700, it may be a good idea to go long on confirmation on smaller time frame because uh, Nifty Bank has much better reward to risk as compared to the Nifty index. Right. So this might again have some more strength to move up on smaller time frames. Looks like that's the only area of demand zone which, if it comes there, you can go long. Everything else will be pretty risky. We are right now in a area of supply zone. If this supply zone holds, we'll definitely come to these areas. So do not long before this. And the next supply for Bank Nifty will be somewhere close to 48,800 to 49,100. Further intraday time frame, in case markets show resilience, maybe that's the area which might still hold up. So once we break this area, you will definitely come here where you can initiate new longs, and that's the demand zone that you can see from 47,300 to 47,150. But if this holds, it probably might inch up. But again, there could be price action like this, wherein you may not get good reward to risk till we break this or come to this point. So stocks will be a better option to trade instead of the index. So slightly bullish bias, but very, very high on the curve. Index maybe spreads are a good idea to trade. Futures probably only intraday.